Have you ever wondered how smart traders spot market reversals before they happen? I'm one of your mentors from Spektrades, and today I'll show you how to identify, trade, and profit from market reversals like a pro. Without further ado, let's jump right into this video. Let's get into the foundation of liquidity. The definition is liquidity zones are areas where pending orders, buy stops, and sell stops are clustered. Smart money targets these areas to execute large trades with minimal slippage. This right here is the definition of liquidity. Why do the liquidity zones matter? They act as magnets for price. Understanding them give you an edge and predict where the market will move next. In key liquidity zones, such as the swing highs and lows, are areas with clustered stop loss orders. In equal highs and equal lows are retail traps that institutions exploit. Imbalance zones are also key areas of liquidity where orders remain unfilled. As you can see right here, this old high right here is what we call a swing high, where we have a 3 candlestick pattern. We have 1 candlestick, 2 candlestick, and a 3rd candlestick. Above this swing high right here is what we call liquidity. Price will rally higher, just like we see right here, to clear this liquidity zone right here, to then extend lower to give us a market structure shift. And just like I stated, our imbalance zones, also this fair value gap right here, is also a point of liquidity because orders remain inside of these zones and price has to pull back inside of these imbalance zones before reversing and extending price. So this right here is the foundation of liquidity. Understanding the foundation is very crucial. And now let's get into how smart money uses liquidity zones. Let's get into the mechanics of liquidity. The first thing that we have is our liquidity sweep, where smart money will drive price into liquidity zones to collect orders. This right here is what we call our liquidity sweep. As we can see right here, this is our Asian low. We see that price push down lower to clear this old low right here and leave this wick rejection. This right here is our liquidity sweep. Then we have our reversal or our continuation. After the sweep, watch for confirmation of trend continuations or reversals. As you can see right here, after price give us our liquidity sweep, price then give us our reversal before extending price and rallying higher. And then the third is to look for price reaction zones. Look for wicks and sharp rejections as signs of institutional involvement. As you can see, after price give us this strong liquidity sweep right here, this is when the institutions step in. That's when we have to position ourselves on the lower time frames to catch our trade and then attack opposing sides of liquidity, these old swing highs. Some key indicators of liquidity grabs is fake outs above resistance or below support zones and rapid price reversals with volume spikes. And also a pro tip I can leave you guys with is to combine liquidity sweeps with other smart money concept tools like order blocks and fair value gaps for sniper entries. So after price clears this Asian low liquidity right here and then rallies higher, on this pullback, on this reversal right here, that's when I'll scale down on the lower time frame and wait for a market structure shift and combine this liquidity sweep with other concepts like order blocks and position myself inside of a order block or a fair value gap to then extend higher. So this right here is how smart money uses liquidity zones. And now let's get into how to trade the liquidity zones. Make sure you guys screenshot this or click the first link in the description to find the full PDF of every video. For this entry strategy right here, the first thing we have to do is wait for our break and retest. We enter after a liquidity sweep when price retests that key level. As we can see right here, price push down lower to clear all these old lows right here. And when price rallies higher to give us a market structure shift, price was once in a downtrend, but after this liquidity sweep in this rally higher to give us this breakup structure of this swing high, price will then come back and give us a retest. This is when we enter right here. On this retest, we'll then position ourselves, just like I stated, inside of a order block or a fair value gap. That's where we catch our sniper entries. We then use lower time frames to refine those entries after we identify our liquidity zones. And for me, I always risk between 0.5R or 1R. And I place my stop loss below swing lows right here, just above or below the liquidity zones to avoid premature exits, right? And for our take profits, as you can see right here, these old swing highs, we always aim for opposing sides of liquidity after we enter our trade. So we have these old swing highs right here that failed to push price lower. So after price give us this manipulation of this order block right here, I want to see price rally higher to extend and clear this old swing high right here. Me personally, I only trade the New York session, right? The New York kill zone is between 7 a.m. to 11 a.m. Eastern Standard Time. That's when I'm looking for price to push down lower, give me this liquidity sweep in this market structure shift, and on this retest, that's when I position myself nicely and then extend higher to opposing sides of liquidity. And then a bonus hack is that news events often trigger liquidity grabs, so always be prepared to capitalize on these high volatile opportunities. And now let's go on the charts and see exactly how we can execute this strategy. So want to watch me trade this account live every single day during the New York session? Make sure you guys click the first link down below in the description. It's gonna bring you to this website right here, the Spark Trading Mentorship, where you can get access to a full trading course in daily live trading with me, Spektrades, and my brother 𝗯𝗃𝐻𝑇RADES. Also, you guys can follow him on YouTube and on Instagram. His name is 𝗯𝗃𝐻𝑇RADES. We both live trades every single morning, and you can get weekly webinars, a private community. And if you are not able to join the Spark Trading Mentorship, make sure you guys join the Spark Trading community also, where we have free trading community, trade breakdowns, and a 2-hour free trading course in free PDF and ebooks. That's the first link in the description. Now let's hop on in that out on the charts. We're currently on the 5-minute time frames. We can see that price push down lower to give us a liquidity sweep, right, of this old low, and then rally higher to give us a break of structure right here. This right here confirms our range, right, from this old low and now this old high right here. So everything inside of this range right here is internal range liquidity. So we see that price build this Asian consolidation zone where liquidity is hiding below and above this range right here. Since price pushed down lower to give us a liquidity sweep of this low and then rally higher to give us a break of structure, I want to see price to pull back to clear this Asian low right here and tap inside of our order block to then extend price higher. As you can see right here, just like I stated, we want to see a clear liquidity sweep when price is clearing these liquidity lows. This right here shows us signs of institutional involvement. And then next, I want to see price reverse and then extend higher to come and clear these old highs right here. Now let's play. Boom. As you guys can see, price pulled back, mitigate our order block right here before it reversed higher to come and clear our old range high right here. Now let's look at another example. And now as you can see, price left this old low right here and rallied higher to give us this old high right here. So as you can see, price left this internal range liquidity low right here, this swing low, right? Just like I stated, the swing highs and the swing lows are our points of liquidity. And then we see that price rallies lower to clear our swing low and then push up higher and left this fair value gap right here, this imbalance zone. Just like I stated, we just want to place our trade right at the fair value gap open and our stop loss right below the candlestick low, and we're targeting opposing sides of liquidity right here. After price give us our liquidity sweep and then rallies higher to give us a lower time frame market structure shift, all I want to see is for price to pull back, mitigate this imbalance zone right here before extending higher to come and clear our old highs. Now let's play price, and boom. After price pushed down lower to clear this swing low right here, price rallied higher to give us a lower time frame confirmation, and then on that pullback, on that retest, I positioned myself inside of this imbalance zone to then extend higher to come and clear our old highs. Understanding liquidity will help you better align with smart money and catch these beautiful trades that will yield you a lot of money. If you guys are interested in the full PDF of this video right here in a free trading course, in a free trading community, make sure you click the first link in the description and join the Spark Trading community. Well, this is it. Make sure you guys like and subscribe and comment down below what you think of this video. This is it. Spektrades out.